Okay, I think we're live. Chat, let me know if I haven't forgotten how to set this thing up. It's been a while.
Looks good to me.
I mean, that
actually.
said, Twitter Spaces bangs, dude. It's really popular. The people come on and like they're super, loose-lipped when it comes to what they say about the market because they don't feel like it's this whole podcast format. I don't know. It's fun as well.
Are you shit talking the YouTube viewers right now?
No, I'm making excuses for myself and my absence.
Yeah. Nah, I mean, I've been getting questions about you being absent for pretty
Months.
much every single stream I've got. Yeah, it's like, when the fuck do we get cred? Go away, Duck. We want cred.
How charming. That's nice of them. Looks like everything's working. Ragul says echoes lots of it. I don't believe him.
Yeah,
I'm going to call him out. It's fiction. It's not true. Yeah, so it's Andrew Little says, who is Cred? There you go. That's one of your organic viewers, Don. You should feel really good about that one. Okay, let's... First of all, thank you to FTX for supporting Technical Roundup. That's the formerly Blockfolio FTX, where you won't get wrecked by leverage. Go buy some spot altcoins, move around from altcoin to altcoin, as the one you buy doesn't pump and the one you rotate into doesn't pump either, and then the one you rotated from pumps. That's usually how rotations go if you're new to this kind of thing. But it's a great app. All your mobile/spot trading needs are satisfied there. It's certainly when my sister checks her Solana that I gave her and she outperformed me for months. But we don't talk about that because I'm supposed to be the pro trader, right?
Yeah.
Yeah, okay, cool. So, first things first, I want to go over Twitter news headline type of stuff. And I'm going to actually start with a source of... I've been getting wrecked on Twitter, unsurprisingly, because I didn't pretend I bought the bottom. And that's generally what you're supposed to do on days like this, right? You either pretend you bought the bottom with like weird retweets from 10 weeks ago, or you just kind of bull post and cheerlead to give the impression that you're benefiting as handsomely as those who are fully positioned, right? That's kind of the playbook. Are you
calling me out right now?
No. That's later. Whereas I just posted that I didn't get filled where I wanted to, and it's just shitty. But one of the angles at which I've been getting completely wrecked on Twitter is by the followers of our good friend Will Clementi, the on-chain lead analyst at the Blockware team. So he made this post on 25th of September, obviously aged very well. He says the Bitcoin floor has been set, large bids across all major exchanges. Bitcoin came within $1,300 of my on-chain floor model and is still $148,000 from my top model. Do we trade a few $1,000s lower? I couldn't care less. The asymmetry of being long over the next few months is huge, right? And that was his thesis. And so basically there was confluence between these large bids on Bitfinex, Deribit, etc., as well as his on-chain floor model. And I was idiotic enough to comment, right? And to take the bait. And I basically said, look, even if one agrees with you, and I mentioned this especially for the idiots if price were to moon, inferring a floor from resting orders is not sound reasoning. Those large bids are advertisements at best, as they do not represent transacted volume / money changing hands. And I still think that's a good argument, right? Like in general, forgetting, setting aside the specific idiosyncrasies of like large Bitfinex bids at market inflection points, because there's probably some signal there rather than noise. In general, looking at resting orders above and below market doesn't like guarantee a floor or a ceiling, right? Because it doesn't cost anything to show those orders. And then it doesn't cost anything to cancel them either. And sometimes you see the market just gets walked up in one direction with, a chunky bid behind it the whole time, and then it reaches a certain level, and you literally refresh the heat map, and there's nothing there. It vanishes, right? And that shit happens all the fucking time. Because, if I'm a larger trader, it doesn't necessarily mean I want to choreograph every single area where I want to do business. Especially on like an intraday basis, you can quote unquote spoof price with large bids below market to push it into your asks, and vice versa as well, large asks to push it into bids on other exchanges. So my basic point was like, it's not that straightforward in terms of reasoning, forgetting this specific example aside. But obviously price went up, and then that meant that I shorted the bottom somehow, and that I'm an idiot. So I've had a fun time kind of muting notifications from this one. I still think and I've got a lot of time for Will, but generally speaking, I still need convincing on the premise that there are good, like, floor/ceiling models that you can make for Bitcoin. By definition, it's like a very, convex, reflexive asset class. When it goes up, goes up a lot, and finding a ceiling for it is generally impossible. And a lot of the time when it goes down, we have like the good old joke, we have a black swan like every 6 months. When it goes down a lot as well. And it's very hard to predict where those tops and bottoms are going to come in, and it doesn't really pay either, generally speaking. The whole thing about Bitcoin is the supply is kind of predictable by virtue of its programmed monetary policy, but it's the demand side of the equation that gets really, really crazy and much harder to model, in my opinion. So yeah, that's kind of my take on all of that. Am I an idiot, Don? What have I missed?
No, I mean, I agree. In general, like when it's so easy to kind of manipulate the market, I mean, you can. The thing is with Phoenix walls, they've actually been quite accurate. So there's at least something there because they get like pulled rarer than on other exchanges, but rarer in general, like it's always this case of, I mean, it works. So people are like, okay, this is always going to work, but that's just not how it works, right? You can do these for free. And
yes.
Yeah.
So that was fun. That was my morning, kind of the follow-up, this aged well type of roast. This is what happens when I try to like educate on or like give my view on market microstructure type of basics. Just get wrecked when price goes up, essentially.
I mean, it's the same argument that we always have with the on-chain guys, right? Like if they turn out right, they're gonna say Bitcoin went up because of the on-chain, not on-chain, the stock-to-flow stuff, because stock-to-flow model. But that's not the case, right? Bitcoin just generally tends to go up. You could make a bullshit kind of thing based on something that goes up, overlaid on Bitcoin, it's probably gonna work because, I mean, Bitcoin just generally tends to go up in the long run, right? And yeah, so people always try to kind of put reason into like why it's going up, or like a model around why it's going up. But most of the time, it's just like Bitcoin just tends to go up because people like the coin, and yeah, you don't need to kind of make shit up to fit that.
Speaking of Twitter petty grievances, I'm going to bring up your feed. You were having fun with a gentleman called El Topo Chico. Dealing with these kinds of people gets so tiresome as a trader. It's like speaking with a child. And it's like the good old thing where you seem to live in some altered version of reality where even when you buy, you're selling. And then if you're doing nothing, you're selling as well. It's like nothing you can do makes you... It's like a fucking vampire with no reflection in the mirror, right? There's like the real world seems to break whenever you're bullish, because you're kind of not allowed to be. So I watched the replay of the stream where you closed your short essentially, and then commented on the relative strength and the market's gone up. I know you were buying a bunch of fucking NFTs as your long exposure to some extent, which is always fun as well, alongside Bitcoin and ETH. But do you have because that was my Twitter petty grievance. Right? The fact that I was trying to make a point about market structure and got fucked on the, oh, look, price went up, therefore you're wrong, which is always so painful because it wasn't a directional call. So on your side of the equation, how, let it all out. What's Twitter been like when you go unrewarded as a bull and accused of being bearish? Is it fun?
Nah, dude. It's so annoying because like whenever prices go down, people claim I've been bullish. Like people, it's so fucking weird. Like I'm wrong often enough, and like for some reason, like whenever I'm wrong, I rarely get like shit for it. But like it's so frustrating when you're right and you get shit for it, right? Because I mean, I wouldn't mind like if I make a wrong call and someone calls me out on it. I mean that's fine, right? That's just trading. But it's like if you're right on something, and then you just get like stupid idiots in your comments all the time, just saying you were actually doing the opposite or whatever. It's like, it's so annoying. But I mean, it's just, I guess that's how Twitter works. People, right. I think in general, what people do is like they tune into the stream like once, and then they hear me say, okay, I think like the chances of this being a complacency bounce is quite high, be a little bit careful. And it goes down. And then they're like, this guy is such an idiot. I'm bullish Bitcoin. I'm never going to listen to this again. And then 3 weeks after, I changed my mind, right? But they obviously never return. And then they're like, okay, but you said. And then it's like, you can't really win with that, right? Because as a trader, your opinion changes a lot. And I mean, like whenever I see strength on like the daily or like on the higher time frames that I didn't expect, I usually try to flip my position if I'm bearish. It's just, you'd be stupid not to, right? Anyone that kind of can't look above whatever their position is and just kind of flip it when they see something that really shouldn't be happening, I mean, then you're just a shitty trader. But it's like, I guess it's just how all of this works.
Social media mental illness continues, right?
Yeah, I've already kind of conceded that I'm always going to be wrong for some people. It's just how it is.
I was trolling Trader Main as well because he had this tweet thread of Bitcoin at support. It was the 38 to 40k level. And then he posted an update from the 27th of September with a bunch of like all caps at the bounce. And my comment was, first win. And then Rookie says, you think you're good at something? Good or something? This kind of stuff is always like very easy to meme because when people like overreact to their trade chart idea doing very well, it's always easy to meme them that like, hey, this should be like a semi-regular occurrence, right? Like, why are you so surprised that you put out a thesis and it worked? Like, how is this a new thing? You know, Stardust or Starbust loves to meme about that kind of stuff as well, so that's been fun. And then on the final Twitter section of the show, if you will, is literally maybe one of the worst tweets on the website. Did you see this from Robert Is it Leshner? I probably butchered his surname. But he is the... What is he? I think his DeFi protocols, they don't have like founders per se, do they? He's up there at Compound, right? And then he says, and basically there was an issue with the smart contract where some users got a larger amount of rewards than they were supposed to, right?
Yeah. Much larger.
Yeah, and the way he decided to handle this, he's the CEO. Okay, you never know with these DeFi protocols. It's like, what do you call them, right? It's like, I guess the CEO. And he tweets, if you received a large incorrect amount of comp from the Compound protocol error, please return it into the Compound time lock. He gives you the liberty of keeping 10% as a white hat. So you're like, oh, that's nice. And then he fucks it up, right? He says, otherwise, it's being reported as income to the IRS and most of you are doxxed. As a DeFi project founder, this is surely one of the worst fucking things you can tweet. Essentially threatening people who receive your governance token from a smart contract error to the authorities, right? Yeah, or implying that at the very least.
Thing he could have tweeted. It's insane.
This is one of the worst tweets I've ever seen. Like, considering the context and like who he is, it's really like especially bad.
Yeah, I mean, he could have kind of played it like if he just wrote the first two things.
Yeah,
I think most people would have actually been very happy to comply, because like most people are actually quite nice. It's just when you threaten people, they're gonna say fuck you.
And these are like DeFi degens as well. You know, the whole reason they're in DeFi is probably because they fucking hate those 3-letter agencies and want permissionless lending, borrowing, etc. And then the CEO goes and drops the IRS card on them. It's just, you know your audience type of thing.
Dude, I'd be so angry. Like I didn't get any airdrop from them because I don't hold any comp. But like, I would be so annoyed by all of this because even if you send all back, right, you kind of have to explain that to the tax authorities because it's like you get money sent and then you give it back and it's like this fucking nightmare. Like I wouldn't want to deal with it. And then getting this kind of bullshit thing, I don't know. It just seems super scary.
The tone was... I couldn't think of a worse tone for something like this. I'm going to speed through the rest of these, and then we'll just talk about the chart stuff, which is mostly straightforward. Big bounce, above 45k, it looks good, right? Like, that's like the summary version for those waiting patiently. But we will go into more detail. I just want to get a lot of these out the way. In terms of altcoin longs and market momentum continuation, I don't know if you saw this, Axie Infinity launching a decentralized exchange. I don't know how well it's going to do, whether it's going to be competitive, anything like that. But also, I don't think it matters, right? Narratives are so supercharged when the market looks strong from a higher time frame perspective that even if it doesn't turn into some leading DEX, whatever, for like a trade, this is the type of tailwind you typically want to see to decide which sector, etc., to allocate. So Axie, did very well off the bottom. I know because I didn't get filled on anything. Seems to be some sort of recurring. Why did I type in Axie? It's AXS. There we go. That's gone and set a new all-time high already, and without reaching my levels, obviously. But the broader point I'm making is for the market. If we see kind of Bitcoin strength / macro strength generally, and some of that starts to trickle into altcoins, or that rotation takes place, short / medium terms, narratives like this will just supercharge something that's trending up already. So, you don't need to form an informed view as to how competitive this DEX is, what exactly is the value add to Axie holders, etc. From the kind of market environment you're in. That kind of stuff will be enough to full send something. You kind of see what I'm getting at?
Mm-hmm. Yeah, it's just good news in general.
Yeah. This is on my radar to buy the dip into weekly structure. Didn't get there. It looks like it's going to engulf now. It's the Hosaka 3, the Trinity. Axie, Solana, and Luna, right? And then, Hosaka wakes up, tweets, they bottom tick and go up 20%. Good guy to have on notifications on for if this continues. Also, just like a curious intraday observation. During the rip, Bitcoin led, and ETH BTC was red, and that seems to have flipped a little bit now. Probably not too important, given we're just dealing with a couple of percentages, but curious to see whether the whole Bitcoin DOM argument sticks as we rally through the 40s. And I've also just eyeballing the watch list, Phantom and Solana among my altcoins at least leading. We'll go into all of that. Let's get through these somewhat quickly. More housekeeping. Coinbase reports at least 6,000 user accounts compromised through exploited authentication bug. This was March of May of this year, so, if you got wrecked, you probably know that already. But yeah, people, as much as we talk about trading, risk management, etc., you got to actually protect your crypto itself and your accounts themselves as well, more than anything. We generally recommend having a separate email for crypto, which has random string elements and isn't linked to anything else, where you kind of sign up or share your information, and make sure to have a unique 2FA device and whitelisted withdrawals and all that good stuff for that crypto account. Some people like to argue that you got to, not your keys, not your coin, etc. I understand it from a tech / principled point of view, but generally speaking, I don't know where you sit on this, Don, but I always don't mind people keeping crypto on reputable exchanges, because I think it's easier to secure an exchange account than it is for people to do so with like a wallet.
Yeah, I think as long as you do it on like a proper exchange, which you just mentioned, I think you're probably fine. For the newer people anyway, you've seen like very experienced people like not so fast get wrecked just by messing something up.
Yeah.
For like whenever someone asks me in real life what they should do or where they should store their crypto, I usually just tell them just keep it on Coinbase. And I know that goes against kind of the thought behind crypto, but it's like, it's so much easier for everyone involved. It's like, I don't want to run them through like doing everything properly. And even if I do, I don't want to run the risk of kind of them fucking something up and then me being somewhat at fault. So I'm just like, fuck it, go to like Coinbase or go to wherever you kind of
FTX.
Yeah,
wink, wink.
FTX. Yeah, and then just go with that and you're mostly fine. Like, there's always a risk, but it's very, very limited in those two cases anyway. For those
also on Coinbase, you can now, at least in the UK, they keep offering these like you're insured up to like 150k, and then you can opt in for more. That the protections are becoming a bit more sophisticated in that regard. So yeah, either way, you still should, even for you're probably using a crypto exchange if you listen to this show. Make sure to get a new, fresh email. Don't mess it up and sign it up to a bunch of crap. Make it your crypto email and keep it safe. That's our kind of bit there. Not worth stacking sats if you're going to lose all of them to some fake Elon Musk giveaway or I don't know, whatever it's going to be. This headline is hilarious. Miami coin has generated $7 million for the city, the mayor says. This Miami mayor guy went through like a full crypto market cycle in just a number of months. If you remember, around the time of the Bitcoin conference in Miami, and even before that, he was like, oh yeah, we're going to make Miami a Bitcoin city. And, basically all the Bitcoin-oriented thinkers in our space really kind of warmed towards him, because you had a state official who seemed to be taking Bitcoin very seriously. But he literally did what we all did in 2017/18, where you get into Bitcoin and you're like, hey, this is cool. And then you discover altcoins. And you're like, holy shit, forget Bitcoin. Why would I ever hold that? I can make so much more money with these other coins. And so then out of that came Miami Coin, which represents a stake in the municipality. You can run something equivalent to nodes, etc., etc., and you stake it and all sorts of stuff. I didn't really have we're looking at a variety of things, from being able to make payments in crypto, in Bitcoin in particular, being able to pay your taxes, blah, 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 blah. I don't have like a hot take here, but for me, it's just hilarious how quickly he went through the cycle where you become like a mini Bitcoin maximalist and then you discover shit coins. And then he went full, all the way down the cycle where he kind of made his own coin as well, right?
It's so fucking weird to see. Yeah. I don't know why you'd want to buy that coin, but I mean, good for him, I guess.
Yeah, this is I just love this kind of stuff. Tax-free city, yeah, I'm sure that's going to go down very well. Nice to see the mayor shitcoining though. I mean, we have Bukele, the president of El Salvador, like prop trading Bitcoin, so I shouldn't be surprised by anything at this point, right? The Block, another article. Also, we love our friends at The Block. Go support them. Bitcoin price shoots up towards 48,000. This is by Tim Copeland. Very volatile, etc. What I wanted to bring up was, in terms of mainstream/news narratives that are attached to the price movement, this is quite good by Tim. He talks about the futures market, etc. And then, you can basically roll the dice as to what mainstream/fundamental narrative to attach to the pump. And on this occasion, the article says, this comes on the same day that El Salvador has officially started mining Bitcoin, although it's still in experimental stages. They mined 0.0059 BTC so far, so many times my net worth, using geothermal energy from volcanoes. So Don, question to you. If you had to, if you were a journalist, God forbid, not because there's anything wrong with journalism per se, it's just you being a journalist, that's the offensive part, and you had to attach a narrative to this pump, you roll the dice. Which piece of news would you use to justify the pump? Do you like the volcano mining one, or would you go for something else?
I mean, I have to kind of put news on it. So
yes, you have to.
Okay, I mean, what happened in the last few days? That's a tough question, because I mean, nothing significant happened really. I mean, you could say I would put it in like like the traditional markets recover basically. Nice. Because I mean, they've been kind of pumping today. So, but then again, like crypto front ran it.
Yes.
So it's not really. But then again, like El Salvador had zero impact, so it doesn't really.
I mean, I don't know, dude. They mined $260, a whole $260. It's pretty serious. But that kind of stuff is cool. I mean, I'd still, not my president, as the famous American election slogan goes. But whatever. If you want nation state adoption of Bitcoin, it was never going to be some G10 country leading the way, right? You've got to start somewhere and then hope it trickles up, although unlikely in my opinion. Anything else that's interesting? In terms of like FUD/stuff on the horizon, this is from CoinDesk. Stablecoin issuers could soon face bank-like regulations. There's a highly anticipated report on stablecoins expected to be released in October. Could soon be subject to bank-like regulations, according to a report from the Wall Street Journal. This is from the Treasury-led Presidential Advisory Group, which we've heard about a bit before. And the report was first announced in July and expected to be released in October. The Treasury spokesperson declined to comment. This shouldn't really have a huge market impact, in my opinion, because I think for two reasons. One is a lot of these stablecoins have been really cleaning up their act in terms of transparency and being clear regarding, where their dollars come from and where they're held. And also the second point is, it kind of just feels like we've been through this. And it should come as no surprise that if you want to play dollar games, you're going to win dollar prizes. And if you want to compare stablecoins to like money market mutual funds, then they are multiple times, much, much more transparent than even a lot of the premier stablecoins that we have. So hopefully this doesn't, they don't come out with anything terribly surprising or onerous. I don't know how binding this kind of stuff is. As far as I know, it's a report, and then whether the legislative branch wants to do anything with it is another consideration. So it's not like this immediate impact that the report comes out, oh no, we're fucked. It would then need to go into legislation, etc., etc. That's my understanding at the very least. But yeah, I kind of feel like it sort of feels like maybe I'm being complacent here, but we've weathered the storm in terms of stablecoin regulations for the time being, unless there's some massive surprise coming out in October. Do you have a take on this? Are you fine with stablecoin regulation becoming kind of more streamlined?
Yeah, I mean, I think it'd be a good thing because that's the main kind of FUD argument anyone has against crypto. But Tether, but whatever, and they're like, it's all going to go to zero because of it. And I think as soon as that's a little bit more see-through, that hopefully ends. And I think like the stable coins have made so much money, I'd be surprised if like there was any problem with them actually doing this kind of stuff. I think they're so big now that it doesn't really matter. Like we've talked about this before, even if stable coins did some shady stuff in the past, I think they've made so much money that they can just clean up their act, basically. And I'm not even sure if they've done anything that is worthy of being called shady. But even if they have, I don't think they do it nowadays. So it's like pretty good timing on that front. Made a bunch of money, can clean up their act, work through all of this, kind of lay the FUD to rest, and then we can all just move on because it's getting tiresome, really.
Yeah, I agree. Also, that's in tandem with Powell saying they don't want to ban Bitcoin and cryptocurrencies, which shouldn't be surprising, but nice to hear it from the horse's mouth. Although I think he's not going to be reappointed, so whatever. Maybe the person to follow him disagrees, although I hope not. That's kind of it for the main news stuff. There's a bit about, Kraken got fined 1.25 million by the CFTC. That's like a hilarious amount. I'm doing your least favorite thing where you take stuff that's bearish and I'm making it bullish by saying that's fuck all. So there's that. And then the other final bit I had was Binance hires 2 former IRS cyber investigators in continuing compliance push. Unsurprising, Binance is under a ton of regulatory scrutiny. You just hire regulators and hope they go fight their friends, basically. But also the real lesson here is if you go to law school, forget about going to like a cushy corporate job straight out of law school. Go work for the government, essentially. Do that for a few years. Take a few swings at profitable kind of fintech, crypto tech companies, and then via the miraculous lobbyist revolving door, go and work there and make multiples of what you would have made at your private practice law firm. That's real alpha, isn't it?
It is. I mean, it's a little bit scummy, but it is. I mean, it's been working.
Yeah. I always used to think, I'm like, oh, why, this person's so smart. Why is he like a government lawyer? It's like, oh, that's why he's a government lawyer. Yeah, that took me a while to figure out. Longer than it should have. Yeah, that's it for news stuff. Leave us a like on the video if you enjoy this. If you don't, we're not chart monkeys. It does help to get some color on what's going on and what's pertinent and relevant. So, yeah, thumbs up. Very important. Okay, now we do the candlestick chart line make boing, Don. This is, we can turn off our brains now.
Nice. I like that.
So, in terms of stuff that's important, I'm actually going to start with the S&P. I don't have like super clear technical levels or anything for this kind of stuff. I have some support at around 43.20 to 43.60, which is a weekly level. That seems to be doing something. You could make an argument that this right here is a bearish retest, blah, blah, blah. I don't really mind either way. I think the more important thing is waiting for a trend reclaim / market structure reversal. And a couple ways you can do that. And I think all signs point towards, as we wrote about in Technical Roundup, this 4,400 type of area. If we look at the 50-day moving average as a kind of up-to-date, fast-moving trend proxy, pretty much since the start of the year, this thing has held on every single dip / pullback. It hasn't been perfect, right? Sometimes you poke above, poke below it, at most for a day, before it gets engulfed and traded back above with this kind of double, I don't know my candlestick chart patterns, I've forgotten all of them, tweezers, whatever, the double long wick thingy. You can tell I'm a great TA guy. Basically any time spent below this trend proxy was very short-lived before it got reclaimed and then continuing upwards, right? And that changed when we wrote about it, because obviously it would. And you had a break in market structure and a real lower low on, when the market first really started to pull back. And since then, you arguably had a lower high because you bounced after that breakdown, and it bounced back into that same area of trend where the lower low formed and the 50-day moving average resided. You had a breakdown, retest into a lower high, and then arguably now another lower low, right? So this is downtrending until proven otherwise. And the proving otherwise, as we mentioned, or as I mentioned, because I talk too much on these shows, would come in the form of a reclaim of this mid 4400 area, because at that point you've both reclaimed the trend proxy we're using, and also that would signify a higher high relative to where the market last found resistance. And at that point, the all-time high becomes vulnerable, and you can make a real case for reversal, and this pullback being enough. Like, it's tempting in crypto terms. Like, if this were an altcoin, you would pretty much say, yeah, wait for it to go down like 50% before even looking to buy it, right? Because when you get these high time frame breakdowns in altcoins, it usually means they go down like 50-70%. But this isn't an altcoin, right? If you look at the high time frame trend of this thing, it's been in a secular uptrend since inception. It literally goes up only. It is the real up only market. So being a secular bear on something like this just doesn't pay. Doesn't make any sense. Even if it's a market we don't trade, that much is obvious just from looking at it, right? And so the reason this became significant and was on people's radars is because recently, and generally, I guess, when the S&P has big downside moves, crypto tends to correlate and move down with the market. The most extreme example of that was obviously the COVID crash. Oh, going to get demonetized now. Oh, never mind. We don't have monetization on this channel. We're good. Was let's call it the dollar crunch. Was the dollar crunch that happened early last year, and crypto, ate shit alongside the rest of the market. It doesn't need to be that extreme for crypto to feel the pull of the S&P when it's trading lower. So essentially the argument that was being made is if the S&P continues to unwind and move towards like prior highs or levels of support, or basically until it bottoms, it's unlikely that crypto decouples and goes up a lot while the S&P is going down a lot. Well, the clearer case was you want to see the S&P like bottom/consolidate, and then once that correlation sell pressure is off of Bitcoin's back, it can bottom and move up as well. Because as we mentioned, the actual move down from wherever it was in Bitcoin, like 50, 48 down to 40, there was nothing like crypto specific about that move. Futures were flat, all the bearish catalysts were kind of not a whole lot going on. It just seemed like a market-wide pull. The way it resolved, so far at least, was probably the most bullish version that it could have done, whereby the S&P kept nuking, and Bitcoin completely broke that correlation and broke out quite significantly. So you had correlation traders get completely carried out, in my opinion, and then you have what's looking to be a market structure break in Bitcoin to the upside as well. Do you have any thoughts on the S&P, on the correlation trade? Is that like a signal in itself that we mooned while the S&P was going down? Is it like a long-lasting one? I'd love to get some color, and feel free to screen share as well.
Yeah, sure. I mean, honestly, I think only the really, really bad correlation traders got fucked by this, because it was pretty, like, you didn't need any TA at all to kind of call this move, because what we've been basically doing is like, this has moved down with the S&P, right? There's not been like a major kind of move that was started by Bitcoin itself. Like, it's all kind of just moved alongside the S&P for the majority of this down move. And then the entire way down, Bitcoin was just weaker than the S&P, right? So what we had basically was Bitcoin struggling to kind of keep up when the S&P was going down, when the S&P was going up, and then dumping harder when the S&P was going down, right? So like, you had that correlation established and people were trading off of it. And then that started to change, right? So the S&P started making new lows in this area here. And I can actually put these side by side so you can kind of see what's going on. Oops. This should work. Let's actually use a clean chart. So
you're going to clout yourself
no,
on your own stream?
That was not on purpose. But
I love how you've got it on your clipboard. You're like... You're there wearing like full military camo, ready to reply guy. Like, second anyone talks shit, Control V, look, I called the bottom. Get the fuck up off me.
Yeah, I know, but like you see this, right? So the S&P topped and then started dying, basically. And what happened with Bitcoin was it went alongside it and then didn't break a new low, right? So you can kind of see like the S&P went down and then made a new low, and Bitcoin just held the low and then started rallying. So like when you see something like that, while the S&P is showing major weakness, if you're a correlation trader, that has to ring alarm bells, because we've seen that before, and that was 2020 in the March crash, right? When the entire market was going down together, both the traditional markets and crypto. And then suddenly crypto showed strength against the S&P, and it completely ripped and went completely nuts, right? So when you see this and you're in a correlation trade and you're like, okay, I think the S&P is going down, so I'm going to short Bitcoin, which is not really the smartest idea anyway, like unless you have a better reason than that reason. But even if, like, let's say you are in that trade, that has to kind of give you pause, right? Because what that means is basically there's a bunch of people sitting here buying everything up, and they're more than happy to kind of take the Bitcoin off of the people's hands that are trying to short this move based on the S&P. And in general, like, you're on a timer anyway when you're kind of trading the correlation, because the S&P generally tends to go up, right? So when you have a market, like you have something that only goes up, and then you have Bitcoin, which pretty much almost always goes up too. And then you start shorting based on that alone, which is already a bad thing. And you kind of disregard that there's a bunch of relative strength. And I mean, that's your own fault, right? If you get wrecked by this kind of pump, it's your own fault. You don't need any TA to kind of see that something changed there. You just got to check, okay, what's the correlation doing? And that's something that I've been kind of talking about a lot, because this market's been quite choppy. And that always happens when the S&P and Bitcoin starts correlating more. And the one thing to watch out for is, okay, is Bitcoin stronger than the S&P, or is it weaker? Because you want to be short Bitcoin when it's weaker, right? Because there's clearly a demand for like bigger players to kind of just sell, get the fuck out. But you definitely don't want to be selling when it's stronger, because then you on the one hand you have like the S&P that usually goes up, and on the other hand you just see relative strength. So for me, the correlation trade, if you got fucked by this, I mean, don't, like, trading isn't just blindly one-to-one, like this chart is moving down, so I'm gonna short this. You should kind of make your edge better than that, I think.
Or at least realize when it stops working, right?
Yeah,
so that's kind of almost more important than recognizing it in the first place, because you can see the blowout from it stopping. When it stops working, it really stops working. Like, there's a price to pay if you take that trade and don't notice the divergence that comes with it. Yeah, that seems fair. So now I suppose the most bullish / best case scenario is S&P bottoms and crypto doesn't go back to doing what it was, right?
Yeah.
What I'd hate to see is S&P continued weakness and then crypto not decoupling from it and following suit. That would suck. But honestly, I think at this point, the correlation trade has mostly been blown out. And apart from like a big crash in the S&P, it's just it's not something I'm going to monitor as closely as I have been for the past couple of weeks.
I think that's fair. I think in general, if the S&P starts dumping again, and massively at that, I think Bitcoin's just going to crash again.
Right.
But then I think it's just the same game again, and you're going to make money with the same strategy again. You look, okay, is Bitcoin stronger or weaker than the S&P? If it's weaker, you want to be on the short side of things. If it's stronger, you want to be on the long side of things, and that's it. And as long as the S&P just goes sideways, all is good in crypto land, I think, because structurally this has changed a lot in my opinion, because like you had a chance to break down at 40K, you've shown a lot of strength. Kind of reminds me of the Sailor bottom, and I talked back then about like how there was like just a bid that was like seemed endless, and this just kind of felt the same way. That's obviously easy to say in hindsight, and I wasn't necessarily saying okay, buy 40K. My kind of mantra has been just buy into strength. Like if this bounces strongly above daily support, so basically daily resistance, so basically 42.2, then it's strong and it wants to kind of break the resistance, and that's kind of what it did.
So are you satisfied now for the buying strength / wait for strength? Is this it?
I mean, I bought a bunch of ETH to buy in. Like I have an addiction, dude. It's bad. I bought a bunch of ETH, actually like near the bottom, and that's not because I was like, okay, this is gonna hold, just because I wanted to buy some NFTs. It's really bad. And then I like when I saw the strength creep in, I just kind of bought some more. I've actually been buying ETH just because, like I said, I have an addiction now.
I can't believe you got hooked so quickly.
Dude, it's bad.
You were talking shit for so long when I was trying
to... I mean, they're shit, in my opinion. Like, I'm still, like, I'm going to shit talk my own investment, but I'm like most of these NFTs are going to go to zero. It's just like, I don't know. It just feels like a fun game to me, and I hope I'm not going to get rug pulled. Can't recommend anyone else to get into it.
Especially now that we're in. I mean, God help you.
Yeah. But then again, like, the fact that I bought a bunch of NFTs down here, and the market didn't crash, but other like went up. Like that's the strongest kind of signal that I need. So I mean, fucking moon it. But no, right now it just, and I talked about exactly this scenario on stream on Wednesday, I think, where I was like, if we break 44, 45, it starts looking like we have a double top here, and that's really close to like. That's probably not going to hold, right? Because these double tops rarely hold unless the S&P just mega dumps. So maybe you get like sideways consolidation into another move up. And then people would be like, okay, yeah, this was the second kind of leg of the move, so that's done. But then you have like a double top here. So that's really close to each other. It doesn't really make much sense to kind of not break that. So like you do like another third push, and if that one's weak, maybe we go down a little bit more. But it's like in general, like this looks like it wants to go up to me.
Nice.
And I'm not going to be bearish into that. Now, I am more than happy to kind of flip my stance if we drop below 44 again. Okay. Like that's kind of like the Boolean validation. Pretty neat that it's a little bit above where I basically entered my gambling problems. So that's that. I think like that shouldn't be lost, and I don't think like if this wants to have any legs, probably should show strength over the weekend, because the S&P has been weak, right? And that's been what's been dragging this market down. So if the S&P is closed, I want to see some strength on the weekend to kind of show that like crypto on its own wants to pull itself up.
But then the narrative will be it's a weekend fake pump, which is mean reverting.
Yeah, but then again, like let's say it pumps, goes into 50K, and then dumps into next week. People are going to be hilariously bearish again, and then we could start crawling back up again.
Okay.
Wouldn't mind that at all. In general, for me, makes more sense to be bullish than bearish here, as long as we're above 44.
What about from a rotation point of view? Because that's been quite a ubiquitous theme in terms of BTC Dom bottom, ETH outperformance, Bitcoin led super cycle, etc. Do you really care? If you're bullish generally, and this kind of looks like the type of market that wants to trend up, do you have a thesis for like ETH outperformance, what to do with altcoins, etc., or for you is it just like Bitcoin and then NFT gambling?
I mean, for me, like the only reason why I bought ETH is because I wanted to do something with the ETH, and that's not something you can do with Bitcoin, right? Which, I mean, you gotta say, like, that's pretty nice for ETH, right? That it's like, it actually, like, you actually use it for stuff in comparison to Bitcoin. Now, then again, like, while I'm making that case, I paid a bunch of, like, for a lot of the buys I did, I paid like $100 per transaction fee. So it's like, it's still hilariously broken, and for me, it's like ETH's just sideways, and I don't know if that's gonna change, when that's gonna change. I'm expecting it to go sideways for quite a while on the Bitcoin pair. And then the USD pair on ETH just looks relatively good to me. It's the same scenario that you have with Bitcoin. Double tops rarely hold in crypto. We've had like a nice shakeout into support at 2.7. Bounced really strongly. Now we are at resistance right now. It's pretty much the only resistance that I could draw. So you want to see that break.
Yeah, I've got that.
Like if that breaks, I don't really see much on.
Like, yeah, it looks like a good long trade to me. Whenever you get these like setups where the first resistance is some sort of awkward double top all-time high, you can kind of just like add a lot to your target because the likelihood of a triple top is pretty damn low, right?
Yeah, that's kind of like I at the minimum, I would think that like if we start breaking resistances and head up, that we go to like above 4.4, maybe it's just go to 4.6, 4.85 and then crash again. I could see that. It's just like as long as we have this in place, there's gonna be. I think no one really wants to short or sell this thing because we all in crypto know that double tops rarely play out.
And if you don't know, you'll learn.
Yeah, it's like if you're sitting in another cloud claim tweet on there. If you're sitting on something and you see this, more often than not, people are just gonna hold to sell into like the liquidity once the highs get taken. So not really bearish on ETH. ETH BTC just looks like it's gonna go sideways. So this adds a little bit of confidence to like the long side for Bitcoin. Now that like Bitcoin can still turn out bearish, right? It's not 100% guaranteed. Like let's say this weekend goes horribly wrong, retraces pretty much the entire day that we've had today. It closes below 45. I'm actually gonna flip back bearish and stay the fuck out of the market. But that seems relatively unlikely, but we'll see. So that's kind of like and it's nice that the daily invalidation of like losing 44, 45 is the same as the weekly invalidation. Yeah. So there's some confidence there. If we kind of close above the support, or like right now it's still resistance, but if we close above the resistance, turn it back into support, I think that's a really good buy, like 45K. And then either swing it into 48 or into like 56 or something.
Sounds good to me. Seems pretty reasonable. I don't have any terribly dissimilar thoughts. The monthly open rally type of thing, whatever. Some people were posting statistics about the likelihood of the low for the month being set on the first day. And I didn't really pass those stats fully. So I don't have like a fully informed take there, but apparently it happens slightly more often than you'd think. So it's not like a complete anomaly if that was the bottom for the month, albeit the zero retrace scenario would still be quite surprising. What I found frustrating is that generally speaking, weekly levels get hit with like an insane hit rate on the Bitcoin chart, and they haven't been to the downside. So the level that I was looking to buy and kept shilling in the newsletter was this 38K weekly former range high. It literally looks like it's the daily level just on the weekly time frame, because the daily looks like this as well, where you've got the range high, you've got some choppy price action around it, and then we reclaimed it, and then this point where the market bottomed is the daily like 40K level. And for me, generally, I've got a rule where if I've got two levels quite close to each other, so let's say, this is level A, and then close to it is level B, I will almost always opt to do business at level B because it's got the higher probability of being a wick / it's also closer to invalidation. And that's especially true if level B is a higher time frame level than level A. So if this is daily and then this is weekly, I'll almost always opt to do business at B, not only because it's further from market and therefore closer to invalidation, but also because the higher time frame precedence usually resolves favorably, i.e. it gets tested. And it just didn't on this occasion. There are too many buyers at 40K. I was willing to do business either at 38K or on a spike, to be honest, all the way down into this pre-breakdown structure at 35K. So the idea was, bid this, because if it doesn't hold, then we're in a really ugly bear market. And then target for that will be whatever, 40, 45K, and then the high. I didn't get that. The daily level was all it took, and the weekly levels missed. And that's pretty rare. So if we do have a dip in, below this low into that weekly level, The charts would look ugly, and I know we diverge on this. I would still take that at least for a punt. That's the thing. When I take those trades, I'm not like, okay, it's either 50k or it hits my stop. If it just rips up even intraday, that's kind of enough for a trade. I just think on a higher time frame basis, there's a setup there. As I mentioned on Twitter, I didn't get it. I was waiting for the weekly range high to get tested, and the daily range high got tested instead. That's life. Shit happens. Quite rare, generally speaking, for weekly levels, but whatever, happens nonetheless. And as for the market right now, yeah, I'm in a similar boat. I can actually stop just drawing with the drawing tool. I've got this weekly level at 45k, roughly confluent with the monthly open at 44k. You can see the last weekly close was below it, and this looks to be a kind of engulfing style close above. So if it closes something like this, that's fine. And I generally think any dips back into structure will get bought. And not only is it a weekly level and all the other stuff Don mentioned there, just purely in terms of daily market structure as well. You've got low, high, lower low, lower high, and then higher high, not relative to this last swing, but the smaller, more recent swing. When you get a pullback, this former lower high is where you'd expect some like really basic technical support, both in terms of weekly structure, daily structure, yada yada yada. I'm still, again, even looking at the daily level, we had this first test here and it bounced and played out from 40 to 45, and then it just kept coming so close to the daily level and missing it narrowly. Now, typically, as weird as it's going to sound, that's a bearish signal. In most cases, for me at least, it's sort of idiosyncrasy of my system. If price keeps coming really close to a level and missing it and bouncing without it without getting terribly far, to me, that's just evidence that you've just got a bunch of double bottoms and weak lows built up in front of support. And then as the market trickles down, those will get flushed completely, and the bounce is more likely to come from a lower level somewhere, rather than the level which has all these wicks above it / has been front run. So I didn't get a setup. I was surprised by how quickly this resolved. I mean, I'm just not interested in shorting crypto, so I wasn't really caught with my pants down in that regard. But, all you can do is look forward. Generally speaking, as I mentioned, this 45k area, same as you, is weekly and daily support. If it dips back in, I think for wicks, 45 and below on a lower time frame intra-week basis is fine. And my target for that would be, again, this untested level at 49k with the highs above it. It'll probably overshoot, but that's quite a strong resistance on my chart, at least, the 50k. So in terms of trades on my radar, quite simply, it would be something, pending the weekly close, blah, blah, blah. It would be something along the lines of from A, 45k to B, 49k. That's on my radar. If per Don's worst case scenario, we really start to pull back and lose 45, I would personally, not be rebuying 40. Might be a mistake, but given the argument I made about all these lows, that's just not a trade that will be appealing to me. And at that point, maybe I'll get some redemption and get to do business at this 38 to 35 at an absolute extreme type of trade higher. But yeah, for the time being, looks good. 50k nearest resistance, 45k nearest support, and anything beyond that will be quite surprising. But in the Armageddon scenario, 38 to 35 is still, my heart yearns for it, given the weekly levels got missed. But sometimes that's just how the cookie crumbles. As for ETH, a similar take. Looking at my chart, it's into resistance here, but this is literally the same box as Don has on the weekly. You can see it's this pre-double top breakout consolidation. So the market's at resistance now. I think the risk reward to buying here probably isn't great. That's not to comment on the probability, just purely in terms of, risk to reward. Not the best trade. The good thing is you can afford to take some liberties with your entries when the market is so close to all-time high, given, again, you probably wouldn't be targeting around here. I would be looking at 5k if we get a bullish continuation type of trade. Just kind of the double top breakout round number, disappear in the liquidity gap that's left above. So that higher time frame trade would essentially look, on a weekly basis or a daily basis, 3,300 resistance. If that gets cleared and you get either some sort of consolidation or some sort of pullback, that looks puntable to me towards, if you're really conservative, 4k as your first trouble area, but at least keeping a bit of a moon bag for it to break the double top and go towards 5. I think that's quite an attractive trade and a bit more to capture than potentially Bitcoin might offer, as is often the case. So that's kind of the stuff that's on my radar. I do have market resistance here, and Bitcoin is slowly getting there, but it's not the type of level where I want to short. It's just if it gives a pullback, that's something I might look to take advantage of.
Someone asked me about my altcoin kind of view.
Yeah, go for it.
In general, I think like if this plays out the way I want it to, which is basically not give a pullback for anyone to enter and then just completely shoot off, I don't think altcoins against Bitcoin are going to do too well, right? It's like whenever Bitcoin goes completely mental, usually you're not going to have much fun in the altcoin side of things. So like I still have a bunch of Tezos. Someone asked me about my XRP like idea. I'm not going to be buying into that like right now, just because I think like if Bitcoin pumps and it looks like it wants to, I'm not going to have much fun in there. So I'm going to wait till basically Bitcoin does its thing, maybe does like a 2 or 3 leg rally, this being the first leg, and then gonna reallocate into altcoins more. Until then, like I'm playing the NFT stuff to kind of keep me occupied, because it's fun, and stay away from the altcoins too. Like from at least, I think there's a bunch of altcoins that actually outperform in situations like this, like the hottest ones, the ones that are shilled everywhere on Twitter.
I think that's Axis, Luna, Phantom.
Basically, yeah. So like if you play those, and if you're like really good at playing those, I think it's not the worst idea to kind of keep doing that. For me, it's like I'm more than happy to kind of catch the Bitcoin move. Like I said, I have a bunch of ETH. I'm not really counting on ETH outperforming if Bitcoin goes mental, in both directions. If Bitcoin invalidates my bull thesis, I think the altcoins are going to dump much, much more. So right now, not too interested. I see some potential, like I said, for like the coins that are shilled the most, like the newer coins that have a lot of hype still. But other than that, not too interested.
I've legit got in my active trading watch list, I've got like the majors, the perps and spot for Bitcoin, ETH, and the ES recently. I've got large caps, and then I've got one called trendy shit as a subcategory. And I just chuck stuff in there that comes up on my newsfeed a lot if it's like hot / likely to be good for momentum continuation. And it's got like AVAX, Algo, Atom, Axes, DYDX, Phantom, Ren, and Tezos, and then all the DeFi stuff below it as well. And unsurprisingly, you know, the biggest movers for the day, at least the ones on my radar, a couple of them come from the trendy shit category. So I really think it pays to, you know, if you've got like some sort of active / leaner trading watch list, if you see a bunch, you know, assuming you don't follow like complete useless idiots, it pays to have like a category like this where you just rotate coins based on Twitter narratives / what's hot, because a lot of the time there's a reason that they're being touted by the non-shit traders, and when the market makes moves like these, or even when it pulls back and you're looking for what to bid, having that ready for you to scan and find levels is quite useful, because what will typically happen is it gets very popular on the way up, and then the market pulls back and everyone's kind of like, you know, more quiet about it. But those same coins usually bounce back hardest when trend resumes. So you want to be on board that, not during the green shill days, but when you get a few red candles, in my opinion, at least. So that's like a decent thing. The final point I'll make about crypto, I've got, you know, from BYBT some futures data. It's got like funding and predicted funding for Bitcoin futures and ETH futures, altcoins, etc. It looks like the basis is mostly flattening out. You had really aggressive negative funding sort of near the lows and as the market started rallying, and you always get the kind of capitulation candle which blows out those positions and brings the market more into equilibrium, and you get basis flattening out and therefore funding flattens out as well. And I think we're seeing that at the moment. That's not like a bullish or bearish thing per se. It probably just suggests either a bit of a slowdown, or you could make the argument that like, oh, it's a big spot bid coming in, etc. But generally speaking, after these like big liquidation events, you tend to get a bit of a settlement period, especially with ETH and Bitcoin sort of relatively approaching resistance, and those have been quite big moves. So yeah, on the futures side of things, that's sort of the only thing on my radar. I will try to link if I can find it right now. I wrote a note on funding a couple of months ago, which sort of explains. It's one of those tools where people seem to focus on it at the wrong time. I don't know how, exactly why that is. I can't find it right now, but it's on my feed somewhere. And basically, the only time, or one of the main times this kind of stuff matters, is when there's a significant divergence between price and funding. So if you've got like very negative funding and predicted funding is dropping even further, which suggests aggressive bearish positioning in futures, and price keeps dripping up, that's likely to be signal. And then you get the same if the market's very leveraged and you have very high funding rates and predicted funding increasing on a breakout, etc. But then the market starts to move lower or just move sideways. That divergence is also likely to be signal. But when things just are slow, or after a big liquidation move, or when the basis is flattening out, etc., there are probably better places to look for setups, in my opinion.
I like that. Yep, agreed.
Cool. That's 1 hour on the dot. Have you got anything else, Duck? I think we covered most of it.
Wow, that was 1 hour. That was quick.
I know, right?
Quick. Yeah. No, I don't think so. Like I mean, just looking at this, right, at the recent 4 hour close. I mean, close through resistance, just kind of cutting through everything.
Moon it.
I mean, can't say much more. Yeah, fucking moon it. Hope that kind of pushes the entire crypto ecosystem. Like, I would like this to kind of start slow crawling up. That'd be the most bullish. If it just starts spiking, gets a little bit less interesting, I think. But yeah, we'll see. I'm in general like leaning bullish, definitely. And I mean, I'm positioned as such too. For like, when do you want to buy? If we close up here on the daily, right? I think daily support in the 46.3 region is as good as you're gonna get. If it starts going much lower than that, for like anything but the wick, I'd be starting to get worried. Not too much, because this is a massive move, but that's kind of my view. Like 46.3, like if you get a wick there, seems decent enough, and with like an invalidation with like the close below 44. Mm-hmm. That's kind of like the best setup that I can find right now. If you didn't just kind of fade the correlation people that got completely wrecked. And I've seen a bunch of people on Twitter tweet about the correlation stuff with like, how long can crypto stay up if the S&P dumps or whatever. I think that's like, it's just a bad way of looking at things. But I mean, always easy to say in hindsight. So if they say it again, I might comment on it and then see if I get blown out like Cred did.
Oh god, yeah, that's always very, very rewarding on Twitter. Yeah, I don't have anything to disagree with there. 45 is an important level. If it really turbo nukes, unlike Duck, I'm still going to punt 35 to 38 and pray. As for continuation trades, I don't really have like as clear intraday levels in the 46s as you do, although I can see where they come from. For me, the best higher time frame continuation candidate is 50 plus, oddly enough. And you remember the video I made when we had this nuke candle here? My argument was essentially that market structure is broken, right? You've got a lower low after this failed breakout, which is typically quite... Is 38 to 40k do or die, or reclaim the failed breakout level at 50k, and then you re-enter this old trading range between 54 and 59. So that played out really nicely, although it wasn't very generous in terms of giving me an entry. I literally tapped, you got 2 days where you could trade 40, and that's it. That was the bottom with a bunch of lows put in nearby. But as per the plan from, a few weeks ago, if the nuke knife catch trade is no longer available, for me, from a daily perspective, where it gets really kind of clear is if the failed breakout above 50k gets reclaimed. And as I argued in that video, that's simply because double failed breakouts tend to be quite rare, right? Like if you've got resistance, market comes in, breaks out, and then trades back below it. At this point, that's a bearish setup, right? You've got a break of resistance which didn't stick. This is your failed breakout, deviation, excess, whatever. And then if the market comes into the level again, where the original failed breakout took place, that's going to be resistance. You expect that to be a resistance. Accordingly, if that already faked out level gets reclaimed, the probability of a double fake out, like another move like that, is generally pretty low. So that tends to be a good continuation signal when the fake out level gets reclaimed properly with a close above it. And at this point as well, given where the lower high formed, not only would you have a reclaim of the fake out level at 50k, but then even to the most sort of strict market structure traders, moving above this high here would also be a break in market structure, a higher high. So you've got daily market structure plus a reclaim setup in its own right. That would be really quite attractive, at least into the former range low at 54k above the previous swing, if not higher. So that's kind of for daily time frame traders, etc. If we don't get dips, which is entirely possible, the area to do business on the continuation side of things, if we, even if 45 becomes unavailable, it's the original plan all the way back from a few weeks ago at 49, 50k plus. I don't know what you think of that, Don, but it makes sense to me.
Mm-hmm. I like it. I mean, in general, like I'm just gonna be, it's really difficult to be bearish here, so I'm just gonna be bullish.
Yep. Sounds good.
And then send it.
Also, we'll there is I disagree. Actually, there is a good reason to be bearish, is that we both have NFTs, right?
I mean, we can actually do like a show where we actually talk about them. So people are gonna hate us for shilling NFTs.
I'm not sure what I'll be able to say about NFTs. I don't have like a sophisticated thesis. I'm just betting on my friends, right?
I mean, I can just say, "Wow, look at this! It's super cute."
Looks rare, and I'll be like, "Looks rare" on everything you show me, and that's the show.
I mean, that sounds like a blast.
Yeah, I don't know how much people enjoyed me showing my OnlyFans yachts, but that's about as close as Technical Roundup has come to NFTs.
Yeah, we'll see. I mean, if there's any demand, if I see like a bunch of comments, I'm gonna share my wallet, like the public one anyway. Don't want to share anything beyond that, and talk about it next time or whenever. Like maybe Wednesday stream or something, but only if there's demand for it, because don't want to bore people.
It's very special. All right, that's all I've got. Are we good?
Mm-hmm, I think so.
Awesome. Thank you to our audience for coming in, listening to us on this Friday. I'm sure you've got very busy weekends coming up filled with social activities, because that's what we all are, social butterflies from crypto Twitter. So be sure to attend those. Like the video if you haven't already. It's free. You click the thumbs up and it does something somewhere to some algorithm in a server farm in Silicon Valley. Thank you to FTX for supporting Technical Roundup. Go get the mobile trading app, trade spot, watch numbers go up, and press the hide portfolio button when/if numbers go down. That's all from us. Subscribe, do all the good algo stuff, and we will see you sooner rather than later. Bye-bye.
Bye-bye.